So, you might have seen the headlines lately, right? Decline in diamond prices eases. It sounds like good news, but what does eases actually mean when the market has been in, well, an absolute free fall? We're going to break down what's really happening behind all that sparkle. Okay, first things first. To really get why a tiny drop is now considered good news, you have to wrap your head around this number. We're talking about a 26.5% drop year over year for half-carat diamonds. I mean, wow, that is a staggering plunge. And let's be super clear here, the market wasn't just soft. It was in an absolute, no-holds-barred free fall. I mean, a drop that big, it sends massive shockwaves through the entire system. We're talking from the folks mining the stones all the way down to your local jeweler. So that brings us to the big question, doesn't it? If prices for 1-carat diamonds still fell by 1.3% just last month, why on earth is anyone calling that good news? It sounds kind of crazy, right? But believe it or not, the answer is all in the details, and that's what we're digging into. All right, let's get into it. The first piece of this puzzle is really buried in the most recent numbers. You know, after a year of just total chaos, we're finally seeing signs that the market might be heading for a much softer landing than everyone was afraid of. Okay, so check this out. This table really tells a tale of two different timelines. If you look at the numbers for January, you see these pretty small, moderate drops. But then you glance over to the year-on-year column, and bam! That's the massive collapse you were just talking about. So the big takeaway here? It's not that prices aren't dropping. It's that the speed of the drop has slowed way, way down. And this chart? This gives us a great visual of that slowdown. Just follow those lines from left to right. See how they start to flatten out toward the end of the month? Especially for the smaller diamonds. That leveling off, that's the easing everyone's talking about. It's that little glimmer of hope for the industry. And hey, it's not just about the raw data. The whole vibe in the market is getting a bit of a boost, too. There's a new trade deal between the US and India that's going to cut tariffs. And that's a huge deal. It gets rid of a major headache for traders. It's like a little dose of good news that just helps everyone breathe a bit easier, even though, the big problems are still there. But we can't get too excited just yet, because that little flicker of hope, it's running straight into some pretty serious global headwinds. Yeah, this story is far from over, and it's definitely not all good news from here on out. So that makes you wonder, right? If things are starting to look a little better, why are buyers still being so careful? Why aren't they jumping back in? Well, the simple answer is that the market is dealing with some really deep, really fundamental problems. Okay, first off, you've got to understand that we're not talking about one single diamond market anymore. It's really a tale of two markets, completely split in two. You've got the US, where people are still buying those bigger, higher quality diamonds. That's holding up okay. But then you look at massive markets like India and China, and the demand for smaller diamonds is just really weak. So whatever recovery we're seeing, it's definitely not lifting all boats. And if that wasn't enough, you've got all these other pressures piling on. China's economy is slowing down, so people there are buying less. Over in India, the price of gold is through the roof, so that's where the money's going, not to diamonds. And this is a big one, the mining giant De Beers just went and cut the price of its rough uncut diamonds. Now, here's why that De Beers move is so scary for a lot of people. Think about it. If you're a jeweler with a case full of polished diamonds, and suddenly the market gets flooded with cheaper raw material, what does that do? It puts a ton of pressure on the price of your finished diamonds. It could totally kick off another price war, and nobody wants that. All of this really forces us to zoom out and ask a much bigger question. Are these just temporary bumps in the road, normal economic cycles? Or are we witnessing something much bigger, a fundamental, maybe even permanent shift in the entire diamond industry? And from what we're reading, the answer seems to be the second one. It seems to boil down to three massive forces that are completely reshaping the industry, and these aren't going away anytime soon. First, you've got the incredible rise of lab-grown diamonds. Second, there's that economic slowdown in China, which used to be a monster market. And third, we're seeing huge social changes, like the fact that marriage rates are dropping in a lot of key countries. And look, the report does not pull any punches on this. It says it straight up. Because of these three forces, diamond demand is permanently lower. Just think about that phrase for a second. Permanently lower. That is a really powerful and, frankly, pretty sobering statement. It suggests this isn't just a dip we're going to bounce back from. This is the new reality. So, if this is the new reality, where does the industry go from here?
I mean, what does the future even look like? How does an entire industry that's built on rarity and tradition, how does it survive this kind of permanent disruption?
Well, in the short term, the path forward looks kind of painful, to be honest. The thinking is, for prices to have any chance of improving, the industry itself has to get smaller. It basically needs to shrink to fit this new, lower level of demand. It's all about adapting by downsizing. And that leaves us with one last really big thought to chew on. This whole rise of synthetic diamonds. It isn't just about a price war. It's way deeper than that. It's almost an existential question. Think about it. In a world where we can create a perfect, physically identical diamond in a lab for way less money, what is the future value of the word natural? What does it even mean anymore? That right there is the billion-dollar question the entire industry is facing right now.